makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Anna Edwards in London, in for Francine Lacqua this hour. The US president has announced a deal between Israel and Hamas that could see the release of the remaining hostages by next Monday. Prime Minister Benjamin Netanyahu has described it as a great day for Israel, while Hamas said it valued the efforts of the US president.
The whole world came together, to be honest. So many countries that you wouldn't have even thought of it, and they came together. The world has come together around this deal. You know, having the ability to deal with trade, having the ability to use tariffs to help me make a point. The tariffs have brought peace to the world.
Let's get some more details from the region. Bloomberg's Jemana Besetcha joins us, of course, from Dubai. So a real breakthrough here, Jemana. Walk us through the details.
A real breakthrough, Anna, and a breakthrough of very consequential proportions, and probably the closest we have been since the beginning of this war to seeing what could be a longer-term end to the war. And as is customary for President Trump, he took to Truth Social. He announced it in the post in the middle of the night, saying that both Israel and Hamas had agreed to the implementation of phase one of this peace deal, which would entail the release of the hostages. There are 20 thought to still be alive, alongside the remains of the last 28 others thought to have died in captivity in exchange for Palestinian prisoners. And alongside that, Israel has also, per that post, committed to withdrawing to a pre-assigned line. So that actually has been confirmed now by the IDF. A short while ago, they did say that operations were in place to move back, to withdraw to that agreed upon line. But of course, many details are still unaccounted for. This is still phase one of this 20-point peace plan. No mention yet of what happens with Hamas disarmament, whether there's actually going to be an arrangement in place to ensure the enforcement of that disarmament, where exactly the Israeli forces are going to withdraw to. Again, not clear from that announcement. And then ultimately, the bigger picture questions around future governance of Gaza, what that apolitical Palestinian committee looks like, what that board of peace looks like, who is going to be composed of, and what role there is for the international community as well in terms of the reconstruction and the rehabilitation of institutions. So still a lot of unanswered questions, but what I would say, it is a day of great emotion. It is a sentimental day in the region. We see images of the families of hostages celebrating in Tel Aviv. We also see images of children, families running through the streets of Gaza, heralding the end of what has been just a devastating couple of years for the region, and perhaps the real prospect of not just the end of the war, but maybe long-lasting peace as well.
Yes, and Jemana, talk about some of the key players in bringing this about, because we described this in our reporting as a US-Qatari brokered deal. The US president himself thanked Egypt, Turkey, I think, and maybe even others, the rest of the world got a thank you from President Trump for bringing this about. But how pivotal was the role of President Trump himself in getting this deal across the line?
Yeah, well, I believe he even credited tariffs for getting this across the board, which perhaps is a bit of an exaggeration. But to your point, Anna, President Trump personally has thrown his weight behind getting this done. And I think you saw a real momentum around it, around the sidelines of the UN General Assembly. He did have that meeting with senior leaders and heads of state from the Arab region. And that was quite consequential, because on the back of it, he then went on to release that 20-point Gaza plan. So there was a lot of buy-in from Arab states and key Gulf allies in the region. And there's a lot of press reporting about how the fact that Doha attack a month ago or a couple of weeks ago actually incentivized and galvanized Trump even further to bring about an end to this war. Because from his perspective, Israel, with that incident, had crossed the line. And you will remember that a phone call took place where the Israeli prime minister purportedly actually apologized to the Qataris after that happened. So that was a major incident, I think, in terms of catalyzing the efforts. But it should be said that President Trump, whatever his motivations are, and remember, tomorrow the Nobel Peace Prize winner does get announced. Unclear whether, it's close enough for him to be in the running. He certainly made no qualms to say that he's putting himself forward for that position. But, you can question his motivations, but at the end of the day, this deal probably wouldn't have come to fruition without the focus and the pressure that President Trump applied on both Hamas and on Israeli Prime Minister.
Jemana, thank you very much. Bloomberg's Jemana Bassetch joining us there with the latest on the Middle East. We're watching that and watching how it develops, certainly ahead of Monday and the release of those prisoners and hostages. We are certainly watching French politics into the weekend as well. We're watching France as President Macron seeks to end the latest political crisis. Lizzie Burden is in Paris with the latest. Good morning once again, Lizzie.
Good morning, Anna. Well, of course, the French President Emmanuel Macron had said that he'll name a new Prime Minister by tomorrow evening. This after the outgoing Premier Sebastien Lecornu, who was tasked by Macron with negotiating with the rival political groups, said that sufficient progress had been made to allow work to begin on forming a new cabinet. And for more, I'm joined by our France correspondent Caroline Conat right here in Paris. And Caroline, it feels like musical chairs. Of course, we've already had 3 failed Prime Ministers. Why would it be any different for a 4th? Who might it be? What would be the compromise when it comes to policy?
Lizzie, are you ready to hold your breath for another 36 hours again? We're basically back to square one, where we were actually in July 2024 when President Macron called these snap elections. And at the time, we were saying there is a chance that perhaps he could name a left-wing prime minister. Of course, the difference now is that the socialist center-left have kind of broken up with the far left, which is obviously less scary for the center and the center-right. So perhaps this is the route that President Macron is going to go this time, or perhaps will he go for some sort of technical figure, Pierre Moscovici, Bernard Cazeneuve, just in order to pass a budget before the end of the year, and then we'll see what happens. Of course, there is still no majority in Parliament. The Parliament is still fragmented into 3 blocks. And in the center-right, the Republican Party, no one wants to see a suspension of the 2023 pension reform, which is what the socialists are hoping to present. So the situation is still very tricky. President Macron has until Friday night, and then we'll see a 6th Prime Minister in just 2 years.
OK, Caroline, thank you so much for that update. She'll be across the story for us throughout the day, live here from Paris with a series of guests as well. But, Anna, we are watching this situation closely. We're also watching the market reaction, of course. And if you look at the French bond market, you are seeing the 10-year yield currently lower a basis point at 3.503. The oat-spunt spread actually narrowing to 82 basis points here. So relief for the French banks. If we check in on those, you've got the likes of SocGen, BNP Paribas up this morning, powering the CAC 40 higher today, and gains as well for the luxury names, the likes of LVMH, although there is the idiosyncratic story of Kering to factor in as well. But when we consider who might be the next French Premier, I was speaking to Arthur Delaporte just a few moments ago, the Socialist MP. It seems like there could be a little bit of wiggle room. It doesn't necessarily need to be a socialist as the next Premier. It could just be someone who is a left-winger. I asked him what that meant. It just could be someone who agrees with them when it comes to the important policy points, as Caroline was mentioning, on pension reform. But at what cost would that be? Of course, the central question, as we experience in the UK as well, is how do you have a more left-wing government but also have deficit control? And that is the concern for the bond market. But if you look, as I say, at that oat-spunt spread today, it seems that there is relief in these markets, that in fact we have a sense that we are inching towards stability, even if it is a lot of deja vu. But let's get more of a perspective on the investor market perspective on all of this. I'm pleased to say we're joined by Marie Jacot, who is Edmond de Rothschild Asset Management France CEO. And it's really great to have you with me this morning, Marie. So thank you for making time for us. As Caroline said, we've already seen 3 French Prime Ministers come and go since last year's elections. Why would a 4th do any better?
Yeah, you're right. I mean, it's been a clearly game of musical chairs. We're waiting to hear what's going to happen in the next 2 days. Obviously, the big question is, are we going to be able to pass a budget before the end of the year? And that obviously depends on whether or not President Macron is able to find the right person to take on the a new government between now and December.
Do you think that the market's underpricing the risk that France heads right back to the polls in a matter of weeks?
There's a risk of that. The reaction of the markets has been very contained. When you look at the spread, Bund OAT, it's 83 basis points, so it's literally been also less than that now. It's been virtually no reaction at all on the CAC 40, so it's almost like the markets have already priced in potentially a victory of the Rassemblement National. Who knows, we're being compared with Italy, although the two programs are very different, but clearly should things evolve in terms of getting a prime minister from the left, then we think that the potential impact on the pension reform could trigger a bigger reaction from the markets.
Well, one wonders whether the politicians need a market crisis to break the stalemate. I wonder how wide you think the Oats-Bund spread could actually go.
It's difficult to say, and it will be very dependent on whether or not we manage to get a special law passed between now and the end of the year, which would allow to put a budget on certain expenses like the defense budget, for example, which is meant to be higher next year, but won't be passed unless there is this special law. So, who knows for the time being, but we think that if the pension reform is put on hold, then it will have a very bad impact also on the equities market, the French equities market.
Well, yeah, I was having a look, and actually I was surprised to see that the French banks don't hold as much French government debt as their Italian and Spanish counterparts. So I'm wondering whether actually it's a bigger risk for the banks that the political risk continues and you have the real economy impact than that you see the yields impact of expensive policies, expensive compromises.
You're right, and there is a short-term and a longer-term impact. Obviously, it will kind of happen in various steps. I can tell you where we are in our portfolios right now. We're obviously underweight French rates. We don't think that any of the options that the government or President Macron have today will be positive on French rates. So we're underweight in our bond portfolios. We're focused on core sovereign debt, in corporate debt, in some of the portfolios, but in government debt, we're more into German and US.
So what would change that to make you a little more overweight on French debt? Is there a sense it would be better to have a quick solution and political stability, less economic impact, and kind of forget about the deficit?
Well, not forget about it, but clearly a temporary solution with a technocratic government, I think would be, positively received by the markets. We definitely need to have a budget passed before the end of the year for investors to continue to trust that a solution is, a potential and will be implemented in the early 2026.
Do you think that markets are too complacent about the prospect of a Le Pen government?
I think some of it has already been priced in. As I said, I think, some of... if you look at the polls, I think the recent IFOP polls show a 35% vote intention for the Rassemblement National should we have a dissolution of the Assembly, which is a very high number, obviously. And that it feels, when we see the reaction of the markets today, on the equities market in particular, is definitely a sign that some of it has already been priced in.
And do you think that this is going to just be more of the same for the next 18 months? Do you see it weighing significantly on the euro, or do you think the fallout will be contained to France?
I think there is a potential for contagion. Again, if there is no progress on the pension reform, I feel, the clearly impact on the fact that this means that the most important structural reform from this Macron second mandate is not going to go through, potentially will be punished by the markets more than we have been in the past. I think the European Commission has been very patient as well, and that could change. And all of this could have a negative impact on markets, yes, and on the French markets.
Well, we're going to discuss the Brussels perspective later on in the hour, but for now, really great to talk to you, Marie Jacot, CEO of Edmond de Rothschild Asset Management France. And coming up on the programme, can gold continue its record-breaking rally? Anna will be joined by the Morgan Stanley commodities strategist Amy Gower on that question next. Stay with us. This is Bloomberg.
Welcome back. This is The Pulse. And let's talk about the metals market. Gold is trading a little lower this morning, just off record highs, in fact, as investors weigh the prospects for peace in the Middle East. The precious metal has jumped more than 50% this year in the face of uncertainties over global trade, the Federal Reserve's independence and US fiscal stability, to name just a few of the reasons we've seen that surge in gold prices. Let's bring in Amy Gower, metals and mining commodity strategist at Morgan Stanley. Amy, nice to have you with us. So gold a little weaker today, and I wonder if there's a message actually in that, because we've had substantial news out of the Middle East, and gold only off a 0.1%, still well over that $4,000 a troy ounce mark. Does that tell us that all of the other factors actually have been playing a really big role in pushing gold higher?
Yeah, absolutely. I think there's been many factors beyond just geopolitical concerns that are taking gold higher. And to me, the major one has been this pivot that we've had from the Fed towards a more dovish messaging. So gold had held about $3,500 an ounce for about 5 months coming into that August speech at Jackson Hole. And then we had that more dovish tilt, and that really got gold going. And I think the key thing really here is the exchange-traded funds. So they've been the major shift in demand this year, and they do move quite inversely with those Fed fund rates. So as we see rate cuts coming through, we see those exchange-traded fund inflows, and this is backed by physical gold. So they really took off alongside the gold price as we had that dovish tilt.
So what's needed to keep the rally in gold going? Because the momentum has been incredible. We went through $3,000 just in the spring of this year, didn't we? And then $4,000, I think, just yesterday or overnight, the night before. So, these records are dropping really, really quickly. But do we need to keep seeing the Fed cutting rates, or just a conversation about rate cutting is sufficient? Any real concerns about inflation? Does that limit gold's gains? We saw a little bit of that last night from the minutes.
Yeah, I think definitely the Fed rate cutting cycle continuing would be helpful for gold. The dollar can also be quite a powerful tailwind. So many of the buyers of gold are holders of non-dollar currency. So if we have the dollar weakening, that means their purchasing power is, of course, improved. So I think that would be a nice tailwind for gold. And then it's sort of becoming its own momentum, I guess, as it rallies. People are really reconsidering how much gold they should have in their portfolios. And so perhaps the old kind of record highs of positioning are no longer the right reference point if people are fundamentally thinking about shifts there.
Yeah, if there is a fundamental sort of more structural change in place. What about the role that the dollar plays here? There does seem to be quite a consensus view around dollar weakness, but I'm just getting a few notes dropping into my inbox, talking with some self-described contrarian views on dollar strength. Do you expect the dollar to keep falling, and then that to be something that then impacts on the metals space?
Yeah, so our FX team do see further weakness in the dollar. They think we're only probably about halfway through the weakness that they would expect to see. And particularly, they would categorize it as a dollar bear regime, which is where you've got real yields coming down, inflation break-evens rising as that dollar weakness is coming through. And if you look historically, that is a period or a scenario where commodities do particularly well, and you start to see above average returns.
Yeah. What about platinum and silver? Often talked about in the next sentence after we've discussed gold, so let's do that. And some of these have industrial inputs, or rather uses and use cases, and that can be helpful sometimes. So what's the story around those types of metals?
Yeah, absolutely. Silver is an interesting one because it sort of sits between copper and gold. Arguably, it's got that kind of electrical exposure. It's used in solar panels and electronics, and it has had a nice deficit market for a few years now. And the interesting thing about silver as well is it's mainly produced as a byproduct, so supply doesn't really react always if prices are moving higher. And then it also is benefiting from those exchange traded funds inflows as people look for real assets. So silver is sort of in this perfect storm, and we are expecting solar panel output to slow a little bit as we go into 2026. So that industrial demand might come off. So we do have gold outperforming, but I think it probably will continue to get dragged higher. And then same for platinum. That's been a more recent turnaround, I would say. And I guess there, the big shift is potentially on the jewellery side, just because it's become so much cheaper.
Let's continue moving along that continuum then. We've done gold, we've done some of the other precious metals. Let's go to copper. We saw a real surge in copper prices actually in Chinese markets overnight, but a lot of that perhaps because Chinese traders have been off for a few days and now are back at their desks. I noticed that some of the explanation for that being placed at the Federal Reserve's door, the fact that we're continuing to talk about rate cuts. What's the mechanism for that rate cut story to get through? Is it like the precious metals side, or is it just around the economy? You know, cuts in interest rates drive demand from an industrial perspective.
Yeah, so the big drag on metals demand over the last few years has really been the construction market. And so if you can have a rate-cutting cycle which does get construction going again, that could be quite a major shift for metals, including copper, which is used in all your kind of wiring and appliances. So I think that is one mechanism. But I think it's worth saying, too, copper supply is really tripping up everywhere. So we're getting incident after incident, and these issues are proving to be more disruptive for production, longer outages. So we're really seeing the supply side getting hit as well. And I think there was some question marks overnight as China came back to the market. You know, would they buy or would they actually sit out? And, you know, historically we have seen price sensitivity from China at these levels, and the fact that they've kind of come in and bought it is quite encouraging. So that's maybe quite a bullish signal then. And the focus has been on the supply side, as you say, at various mines running into trouble. Indonesia was one of them. What's the time horizon for normalisation on that supply side story? Yeah, so I'd say, you know, a lot of these are, I guess, sort of 6 to 9 month issues. We know in the DRC, we need some dewatering to be done at the Kamoa-Kakula complex before we can get a full idea of guidance. For Indonesia, it's going to be, again, a bit of a wait and see. But I think, you know, a lot of the current incidents probably thinking about second half of 2026 or into 2027. But, you know, in the meantime, we might have other disruptions too. We've seen a pretty steady, you know, announcements of disruptions through the year. So just because one is resolved doesn't mean something won't go wrong elsewhere. So before we were talking about AI, we talked a lot about copper and other metals being used in electrification. That was a big theme. Now, there's a lot of AI conversation and data center conversation, and this whole thing has sort of taken off, and a lot of discussion about whether there are bubbles in stocks in that space. How does that filter through into the metals arena? What are you watching for when it comes to the AI story and how it turns into metals demand? Yeah, so I think it feels very different from second quarter of 2024, when there did look to be like a bubble in copper because of AI. You could see that there was huge inflows of non-traditional money. From my personal perspective, I was getting lots of questions from investors who'd never looked at copper before, asking for teach-ins, how does this market work? And so, you know, really getting non-traditional money coming in. You could see the long positioning just shot up in a straight line. Where we are now, I would say positioning doesn't look too overstretched. I'd say it's still mainly the copper specialists who are engaging. So it feels like, you know, more money could still come into this space. OK, Amy, thank you very much. Thanks for joining us. Amy Gower, metals and mining commodities strategist at Morgan Stanley. Coming up, we will return to the theme of French politics. The French president says he will name a new prime minister by tomorrow evening. So heading into the weekend, we'll certainly be watching the French story very, very closely. We'll get back to Paris. Lizzie Burden is on the ground for us, as we know. She'll be talking to Mujtaba Rahman, managing director for Eurasia Group Europe. Plenty more analysis then of where the French politics story goes next. We might get a prime minister in the next day or so, but does that really change the narrative? Do we really avoid new parliamentary elections in France? This is Bloomberg. Good morning and welcome to The Pulse. I'm Anna Edwards in London, in for Francine Lacqua this morning. These are our top stories. Gaza breakthrough. Israel and Hamas agree to terms for the release of all hostages held in Gaza. Israel is to withdraw its troops as part of the peace plan. French President Emmanuel Macron says he'll name a new prime minister by tomorrow evening after avoiding snap elections for now. Plus, HSBC shares slide the most in 6 months after the lender announced his plans to take Hang Seng Bank private.
Back to our top story, and the US president says he will likely travel to Israel in the coming days after announcing a deal between Israel and Hamas to release the remaining hostages in Gaza. In return, Israel would release almost 2,000 Palestinian prisoners as part of a wider deal towards ending the two-year war. Joining us now from Jerusalem is Bloomberg's Dan Williams. Good morning to you, Dan. Talk us through some of the details then behind what is a really important step in the move towards peace in the Middle East.
It's certainly a giant step. For now, I'd say it's a step toward ending the war de facto, not necessarily de jure, and certainly not peace. It's worth remembering that this Trump plan envisages peace coming about further down the line with stipulations that Hamas has to disarm, be replaced by an interim government of Palestinian technocrats, that rehabilitation, reconstruction would require an international consortium. That's a tall order, not least as Hamas has so far balked at the idea of disarming. So what we have now is essentially an open-ended ceasefire ensconced in a peace plan. That ceasefire would return to Israel the remaining 48 hostages. And after that is completed, as you noted, there would be a fairly large-scale release of Palestinian detainees and prisoners. Accompanying that would be a cessation of the fighting and a tactical withdrawal of Israeli forces within the Gaza Strip. So I think the authors of this plan and Israel and Hamas are hoping that basically they will have on the ground a relief, a suspension of those hostilities, relief from the suffering brought about by those hostilities, and effectively that would prove to be open-ended, even in the absence of a deal, changing substantially the situation on the ground in the Gaza Strip.
OK, so substantial reasons then it seems to be hopeful, but with the caveats that you point out. Tell us about the feeling on the ground. This has been a Qatari, US-brokered effort towards peace, but many other countries in the region have been involved in this. What kind of reaction have we seen?
Well, certainly, this has been a profound ingathering of stakeholders, some of whom, it's worth saying, have been historically close to Hamas and may have actually straddled the fence during previous talks in terms of demands for Hamas to surrender, to relinquish power, to give up its arsenal. It would appear that those various stakeholders have been persuaded, perhaps by sheer force of the personality of the US president, to sign on to this deal. It would appear they've also been troubled by the destabilizing effect of this war on themselves in the region. This was not just a Gaza war. It spread to at least 6 other fronts between Israel and Iranian-backed militias and Iran itself. It would appear that they decided it's time for this war to end. In terms of on the ground here, Palestinians in Gaza definitely be relieved. They've been ravaged, really their territory shattered by this 2-year-old war. Israelis as well. The main thrust in terms of Israeli public opinion, the main reason, to judge by polling, for going to war was to recover those hostages, although the Israeli government also set other war goals, including the dismantling of Hamas and ensuring that Gaza is no longer a threat to the state of Israel. It would appear that most Israelis would be satisfied at this point with the return of these hostages. That appears to have been achieved in the very coming days. The question will be, going forward, what will happen to Gaza in the absence of a deal stabilizing it permanently, removing Hamas from power as envisaged by the Trump plan, and basically creating a situation where there might be neighborly relations in the future.
Dan, thank you very much. Bloomberg's Dan Williams joining us there from Jerusalem. So from one clearly very significant story, hugely significant global story, let's go to something a little more market-related, and that is the French political narrative right now. Let's return to Lizzie Burton, who's in Paris, and she can bring us up to date on the latest efforts to resolve France's political crisis. Lizzie.
Thank you, Anna. Well, the French President Emmanuel Macron has said that he will name a new Prime Minister by tomorrow evening. And this, of course, is after the outgoing Premier Sebastien Lecornu, who was tasked by Macron with negotiating with the rival political groups, said that sufficient progress had been made to allow work to begin on forming a new cabinet. And earlier on, Anna, I was speaking to Arthur Delaporte. He's MP for the Socialist Party. And he was saying that the only way to avoid a snap election was to have a left-wing Prime Minister. Take a listen.
If we want to avoid a new snap election, we have to find a way to social stability and to fiscal justice. And if we want this, the only way is to have a left-wing prime minister, because it is the only one who can avoid a new non-confidence vote, because he would have the support from the left, but also a kind of support from the Macronists.
Well, let's get another perspective on this. With me now is Mijtaba Rahman, Managing Director of Eurasia Group Europe. Really good to see you, Mij. I mean, when you're talking to your clients, what do they fear the most? Is it a left-wing government and a spiralling deficit? Is it 18 more months of uncertainty? Or is it snap elections and maybe an open door to the right wing?
It's all of the above. I think the biggest concern is a left-wing government led by the LFI, La France Insoumise, so Jean-Luc Mélenchon, who demonstrated last summer he was very ideological on the questions of economic policy. I think they're very worried about an early election that could also bring Jordan Bardella to power in the Matignon and what that cohabitation with Emmanuel Macron would look like. And then I think they're just worried about the fragile nature of the public finances and debt sustainability if there is no equilibrium to bring down the deficit before a presidential election in 2027.
And you talk to everyone at the Elysee. Who are you hearing is going to be the next PM then?
So I think there are a number of candidates that are in the mix. I think more important than the name of the PM is the political or apolitical identity of the Prime Minister. There's a lot of pressure, as you were just saying, for a left-wing Prime Minister. I don't think that's where Macron will go, because I think that will risk undermining the very fragile bits of the minority coalition, not least Les Républicains. So I think he's probably going to look to choose an elder statesman or elder stateswoman, somebody a bit more distant from politics. Some of the names in contention, I understand, are Jean-Louis Borloo, Gerhard Laschet, who is the LR's head of the Senate, and another individual known as Thierry Baudet, who is the head of the Economic and Social Committee. These are some of the names that are in the mix, but ultimately Macron will make the decision tomorrow evening.
And relatively unknown names, really, to the outside world, those who aren't plugged into all the details of French politics. But I do wonder, when you talk about that centrist bloc that could be offended by a suspension of the pension reforms, is there really still a centrist alliance to speak of?
It's much more fragile, and I think this will now be the challenge that the new Prime Minister has to square, because effectively what Sebastien Lecornu committed to yesterday was a line-by-line negotiation, not just on one but two budgets. Remember, there's the budget proper and then the social security budget. They're not going to use 49.3, which is the constitutional provision that would allow the government to impose a budget without a vote in Parliament. This will be negotiated in Parliament, and so squaring this circle where there are commitments to unwind pension reform, there will be concessions on taxes that the socialists are demanding while keeping the bits of the Macron middle in play, is going to be a very narrow and hazardous path.
But do you think those concessions on taxes, the suspension of the pension reforms as well, is going to be acceptable to Brussels, never mind the investors and ratings agencies?
So Brussels is not going to make a determination on France's public finances until the end of the first quarter next year. I've been speaking to people in the European Commission and the different parts of the EU institutions. They're watching what's happening in France, but I think their general view is you need a government to form and that government to then begin the hard work of deficit reduction. It's not going to be a 4.6% target that Bayrou was originally aiming for. It probably won't even be the 4.8% of GDP target Lecornu was aiming for. Probably what we're going to get is a deficit just below 5% of GDP. And I suspect Brussels, they won't be thrilled about that, but what they will prefer is a government in place that's committing to deficit reduction.
But is there a sense that Brussels turns a blind eye to fatter deficits to keep Marine Le Pen out of power?
I don't know whether it's to keep Le Pen out of power, but I think they accept that the French political system ultimately has to work out a solution that delivers a deficit reduction that is politically sustainable. Of course, they would like more ambition, not less, but I suspect as I say, we're moving to is a deficit just below 5% of GDP.
That seems so hard to sort out. Do you actually think that it's going to take the bond vigilantes to wade in here to break this stalemate?
I think market pressure will be helpful, and it would certainly help those within the minority government that are pushing for more ambitious deficit reduction. But the problem is, Lizzie, with this National Assembly, the socialists are the swing bloc, and in order for a deal to be done, some of their concessions are going to need to be respected. And first of, I think, of all of those concessions is big movement on pension reform. And I think now Lecornu has opened the door to that concession. I think Macron has effectively accepted there will be movement on pension reform, and so that's what the politics is demanding. And that's where I think this debate will now go.
Just finally, we've seen some of Emmanuel Macron's long-time allies, the likes of Edouard Philippe, the likes of Gabriel Attal, basically disowning him. I wonder if that makes you think that the real view here in Paris is that ultimately Macron is toast.
I think on Monday night, Macron was very close to becoming again quite reckless and calling an early election. I think he was advised by many people in the Elysee that if he did that and the outcome of the election was another divided assembly, no clear majority, the pressure on him to resign would have been absolutely immense. And it's only for that reason he's conceded not only to potentially open up the possibility of a left-wing prime minister, but also put pension reform on the chopping block. So I think he's desperate to avoid resignation of the presidency, and I think it's for that reason he's chosen not to go down that path of an early election.
All right, well, Midge, it's great to see you in Paris this time. Mujtaba Rahman, Europe Managing Director at the Eurasia Group. Thank you so much. Anna, back to you in London.
Lizzie, thank you. Lizzie speaking, as she said, with Eurasia Group's Mujtaba Rahman in Paris. Back to the UK now. UK Prime Minister Keir Starmer and India's PM Narendra Modi have held bilateral talks in Mumbai today, shaking hands and posing for the camera as they discussed a free trade agreement which was, of course, signed earlier this year. The two leaders are seeking to deepen commercial ties in the face of US tariffs. Starmer is accompanied on the two-day visit by a delegation of 125 business and cultural leaders. The German Chancellor Friedrich Merz has announced new incentives for low and middle-income households to purchase electric vehicles. The new incentives, worth €3 billion, will last through to 2029. It's the German coalition's latest effort to support the country's struggling autos industry. Shares in HSBC in London are sharply lower this morning. That's after it announced plans to take Hang Seng Bank private in a deal that values the lender at $37 billion. The move will ramp up its exposure to Hong Kong while allowing Hang Seng Bank to offer its customers a wider range of products. The price was set at 155 Hong Kong dollars a share in cash, a premium of about 30% over the last closing price, with the publicly listed shares being cancelled. We spoke exclusively to the HSBC CEO.
This is an investment for growth. This is an investment in Hong Kong, one of our home markets and one of our key markets. Hang Seng is an iconic brand in Hong Kong. It's a leading local bank. It has a fantastic customer franchise, have a very strong financial position. It has a cultural distinctiveness. And the idea here is to effectively take private Hang Seng by retaining its distinctive customer franchise, by retaining its branch network, its own customer proposition.
A First Brands creditor is pushing for a probe into how $2.3 billion disappeared. BlackRock and others are weighing withdrawals from a Jefferies fund tied to the auto parts maker's debt, while Cantor is said to want to revise a UBS unit deal over similar exposure. First Brands declared bankruptcy last month. Coming up on the programme, why Austria is delaying the EU's latest round of sanctions against Russia. I'll be speaking with the EU's sanctions envoy. That conversation next. This is Bloomberg.
Ray, when you were building everything, what motivated you? Was it knowledge or money?
It was really the game. I love the fact that I could be tested in the real world because I'm having these interactions. And I love the fact that I'm scored every day. I could score how I'm doing to 3 decimal places, you know?
Showtime. Ray Dalio built one of the world's biggest hedge funds. Now he's exploring the deep. How often are you on the boat, Ray?
Well, often, let's say I'm probably on the boat 6 times a year, but I spend maybe a couple of weeks.
And it's all over the place, right? All over the world.
All over the place.
We met him on board his research vessel in the port of Nice, where the United Nations Oceans Conference was in full swing. At events like these, world leaders, NGOs, big business, and stakeholders gather to raise awareness and address the urgent needs of our waters.
So is President Lula coming?
It's on and off, and it's on and off, but he is supposed to come with President Macron, but these things come and go.
They're held up. I know what it's like. How long did it take to build the ship?
About 3 years from the architecture to building it.
Is there one thing that you're trying to?
One thing. There's lots of things. We want to see it all. This is twice the size of all Earth combined, right? Of all land, and it's never been explored.
But why? Are you frustrated? I mean, you seem
No,
like...
I'm excited.
Okay.
I'm excited.
An excited Ray Dalio there, speaking to Francine Lacqua. You can see the rest of that conversation. It is, of course, an episode of Leaders with Francine Lacqua. It airs at 5:30 p.m. London time tomorrow. Let me just take you to our top story and a bit of an update on it. We understand that the Israeli cabinet is going to be meeting at 6 p.m. local time. That's 4 p.m. London time to discuss the hostage deal. So we'll see whether Benjamin Netanyahu, having committed to this deal with President Trump and the Qataris brokering it, whether he's able to bring his cabinet along with him. So we'll continue to watch developments in the Middle East with that in mind. Let's return to political matters in Europe. Bloomberg understands that Austria is delaying a fresh round of EU sanctions on Russia, demanding assets linked to the tycoon Oleg Deripaska are unfrozen. Austria wants to lift restrictions in order to reimburse Raiffeisen Bank, which had previously paid 2.1 billion euros to a Deripaska-linked company due to a Russian court order. I'm joined now by the EU sanctions envoy, David O'Sullivan. David, nice to speak to you. Thanks for joining us. Lots to discuss, and we'll do some big picture around the sanctions conversation. But I want to start with this Austria development, if you like. So it seems as if Austria is opposing the latest sanction measures. This is the 19th round of sanctions by Europe against Russia, and it all comes down to compensation they want for Raiffeisen Bank. Is there any progress on this? Anything you can tell us about what can be done to work with Austria to try and get them on board?
Well, I think, as you say, this is the 19th sanctions package. Our sanctions packages have to be adopted with unanimous agreement of all our member states. Austria does have a particular problem, as you say, relative to the possible compensation for Raiffeisen for money confiscated by the Russian courts. But this is not the only problem. So I think we're going to see a few more rounds of discussions before we finalize it. But I'm very confident that solutions will be found and that in the next week or so we should have a new package of sanctions adopted.
OK, so in the next week or so, it's not the only problem. Does Austria have other problems, or are you suggesting other nation states also have objections which need to be overcome?
Yeah, we're still working through some of the details. There are 2 or 3 member states who have outstanding issues which have not been perfectly resolved. This is the normal cut and thrust of European negotiations when you require unanimous agreement. But we're well used to doing this, and we're working our way through it. And as I say, I would be relatively confident that this will be agreed in the next week or so, which is, well within the normal time frame for the adoption of these packages.
Of these other issues, is there anything that risks throwing it off course, David?
No, I don't think so. I mean, there are concerns with some countries related to the reduction of energy from Russia. There are other concerns, but I think this is part of the normal negotiation. The package is 99% agreed. We're now just fine-tuning the final details, and as I say, I'm very confident that solutions will be found in the next week or 10 days, and the package will go through. Yes.
I know you're focused on the 19th package. Then, looking ahead, are there still further things that Russian flows that could be sanctioned? I'm thinking here about the shadow fleet and whether there is any mechanism for Europe to go after that.
Well, I mean, these successive packages are mainly about fine-tuning the sanctions which are already in place and closing loopholes. So for the last couple of packages, we've been very focused, as you say, on the shadow fleet, which is how Russia manages to avoid restrictions on the price of oil. And we've sanctioned over 500 vessels now, which is probably about 2/3 of the entire fleet. We have sanctioned refineries in India, for example. example. We have introduced an import ban on refined products made from Russian crude. So we are constantly redesigning and improving the scope of the sanctions in order to maximize their impact. But I think if you look at the objective economic indicators of the Russian economy, you can see that these sanctions are indeed having quite a damaging impact on Russia's ability to sustain this awful war.
Yes, but the war goes on, David. So from that perspective, is the view in Brussels that these sanctions are proving successful?
I think the sanctions are proven successful, but what I would say, Anna, is sanctions alone are not going to stop a war where you have a dictator such as Mr. Putin, who is determined at any cost and at whatever price to his own country to continue his aggression against Ukraine. I mean, that is something over which there can be no control except through Mr. Putin himself, and making the price of that war very high, which is what we're doing with the economic sanctions, which is what we're doing with the military support to Ukraine, enabling the heroic Ukrainian people to continue their struggle for independence. So I think the sanctions alone will not stop the war, but they are an essential part of the effort to support and underpin Ukraine.
What appetite does the EU have to take this battle to China and India? We know that President Trump, of course, thinks that they are helping to fund this war by doing business with Russia.
Well, we have already, it's true that India and China are trading quite largely with Russia. India, in particular, has increased its imports of Russian oil. We've just sanctioned the second largest refinery in India, precisely because it's owned by Russian interests. We have put a ban on the import into Europe of processed product made from Russian crude, which was a big part of the profits that India was making because they were importing the crude, refining it, and then selling that to Europe. We will now no longer accept that product. I noticed that one of the owner of the biggest ports in India, owner of 14 ports, have just announced that they will no longer allow sanctioned vessels to dock. So I think we are having an impact on the import by India of Russian crude. China is a slightly more complicated story because they are in an explicit partnership, as we know, with Russia. We have frequently raised the issue of China's assistance to Russia, particularly as a platform for circumvention. But I have to say these conversations are difficult, and so far the Chinese position has not changed.
You have lots of experience, David, working in the United States. You were the EU ambassador to the US during the first Trump administration. We've been reporting that the US is demanding fresh concessions in the EU-US trade deal. How alarming or material are the concessions that the US is asking for?
Well, I mean, we felt that we had achieved a very balanced deal in Turnberry back in August, and it was finalized in executive orders signed by the president. Obviously, we would like to think that a deal is a deal and you don't reopen it. But we also know that Mr. Trump is a disruptor, someone who likes to be unpredictable. So I think it's not entirely surprising that maybe he is flagging some new concerns. We will deal this in the same way as we have in the past. Where there is scope to take them into account, we will see what we can do. But fundamentally, we hope that the deal agreed to and passed into law will be held to. And by the way, we have not yet signed off on it legally here. We still need the European Parliament to agree it. So if it is disrupted by the US, then obviously maybe it might be difficult to see it finally approved here. But our desire is to go forward on the basis of the agreement reached between President von der Leyen and President Trump.
OK, David, thank you very much. David O'Sullivan, EU Sanctions Envoy, thank you for your time. A reminder, the next episode of Bloomberg Tech Europe airs tomorrow at 6:30 London time. That episode looks at how AI is reshaping the banking sector, features Jamie Dimon, David Solomon of Goldman Sachs, of course. Up next, Bloomberg Brief. This is Bloomberg.